Boom! What's going on, Investomaniacs? Your boy, a Knight Rider here, and today we've got another Robinhood stock market update for you. Up first, Microsoft sets profit records of $13 billion in profit just the last quarter. Dizang! Cha-ching! Amazon and Microsoft, man, they are across the lake tech rivals in Seattle, the two largest market cap companies in America. Dude, they live right across the street, man. Come on, what's up with that? Amazon set sales records with Prime Day just a couple days ago. Now it's baby Gates's baby's turn. Microsoft profits spiked 49% to a record high last quarter, and at least for now, it remains the world's only $1 trillion company. As the stock rose 3% after the report, Amazon's been flirting with the number, is flirting. It'll get there, don't worry. But it was just a couple days ago, it'll get there, don't worry. It's thanks to the profit triangle of Microsoft. You probably notice Microsoft products at your work, but it's so much more than that. Here's how the $33.7 billion of revenue last quarter was almost perfectly divided 33, 33, 33. The first 33%, productivity and business processing. This includes Office, that's Word, Excel, PowerPoint, etc. And then messaging, that's Outlook and Teams. By the way, I just posted a video yesterday on how Microsoft Teams is smashing it, destroying it right now, totally overtaken the former leader of this space, Slack. And LinkedIn, also in that productivity and business processing 33% category. Remember, Microsoft acquired LinkedIn in 2016. It's been doing pretty well for Microsoft. That second 33% chunk is the intelligent cloud. Companies that have apps or websites, which is like pretty much most companies nowadays, they need processing power. These days, they rent it via servers from tech companies like Microsoft, Amazon, and Google. And then that last 33%, personal computing. You know, us regular old folk, we don't need a whole bunch of renting processing power. No. But we still need our home computers, our tablets, laptops, and our Xboxes. Oh, you need them Xboxes. The takeaway, Microsoft owned Chapter 1 and Chapter 3 of computers, but completely missed Chapter 2. Chapter 1, personal computers. Paul Allen and Bill Gates founded Microsoft. You know, the real OGs of Microsoft. OGs, boy. And they quickly dominated computers with Windows and TPS reports. I'm gonna need that TPS report. And then we have Chapter 2, that's mobile. So Bill Gates did confess that his biggest business regret was letting Google become the default operating system for smartphones with Android. And chapter number 3, where Microsoft came back in the action, was with the cloud. Under new CEO Satya Nadella, Microsoft is #1 again, thanks to, well, I mean, technically they're not #1. I mean, they're still behind AWS with Amazon Web Services. But I mean, I'm saying the overall company, right? They're rocking the overall companies. So maybe they're technically #2, but they still have a really solid footing. It's kind of the equivalent to say Android and iOS, right? There's two players in that space, but they're both still leading and really strong. Where that's kind of how we have Microsoft in the cloud right now. I like Microsoft, guys. I think it is a buy. Up next, iHeartMedia falls on the first day of trading and rebounded from bankruptcy. It's the comeback tour. For nearly a decade, America's biggest radio broadcaster was drowning in corporate debt. Then bankruptcy. Now, iHeartMedia re-debuted on the NASDAQ stock exchange yesterday. The stock slipped 3.5% on day one. The return was kindly made possible by a bankruptcy judge who expunged $10 billion of those debts. In other words, they don't have to pay back that $10 billion any longer. Pretty nice for iHeartMedia, huh? Prior to that, iHeartMedia was paying almost $2 billion per year in interest payments alone. That amounts to about a third of their revenue. iHeartRadio reaches about 275 million users in the U.S. That's almost all the Americans in America over the age of 6. Which iHeart boldly claims is a vaster reach than Google has. One driver of its comeback is podcasts. Users who podcast spend more time listening overall than just music listeners do, which kind of makes sense, right? You can listen to podcasts a lot longer. I know I certainly listen to a lot more podcasts than I do music. And iHeartMedia is the #2 podcast publisher behind only NPR, with shows like Stuff You Should Know and The Ron Burgundy Show. I wish I could think of like an impression for Ron, like Heine. I want to touch your Heine. I don't know. I haven't watched that movie in a while. Companionship is now the real star. Talk radio shows and podcasts, which the CEO calls, quote, radio on demand. Hey, thanks for finally getting with the times, a decade late. Fosters relationships with listeners. iHeartMedia even dropped the term companionship 21 times in its S1. That's the critical filing document for companies that want to trade on stock exchanges like NASDAQ or the New York Stock Exchange. Engaged listeners are more valuable for the company, which is already reaching nearly the entire country. For the time being, I'd steer clear of iHeartMedia. Radio is massive, but it's also dying a slow, painful death. And audio streaming services like Spotify, Apple Music, and YouTube, shout out YouTube, homies, they're replacing traditional legacy radio. Maybe they can turn the ship around. Maybe the ship needs to shrink a little bit before it can be turned around. But you should be pretty careful before investing your hard-earned dollars into a company which just got out of bankruptcy. Up next, Skechers ignored fashion trends and its stock still popped 12%. Dress for the earnings report you want, not the one you have. Skechers is channeling it. Your go-to middle school shoe options for your kids, their overall sales just jumped 11% last quarter. But it's basically become a foreign company, really. Nearly 60% of those sales were overseas, where sales surged about 20%. Apparently, Skechers is a little bit cooler internationally. Got that trendy American fashion over there. Influencers are not exactly wanted. Skechers' U.S. growth strategy may be less extensive as it expands abroad, but it's got one theme: C-list celebrities who can side hustle as shoe ambassadors. Ex-quarterback Tony Romo is the new face of Skechers feet, and his wife is in on the deal too, headlining the brand's 2-year turnaround. He's flanked by retired childhood sports icons like Joe Montana and David Ortiz, who are also still trying to feel relevant. I mean, be active. Golfers are playing too. Brooke Henderson and Russell Knox are repping Skechers golf spikes. The takeaway: avoiding trends is Skechers' trend. With more than 3,000 style options, the company is focused on giving a little something more to everyone, not just the next it thing that one of your friends is already going to have first. That mass market strategy is captured by this single quote from the CFO. Our core demographic isn't the teenage fashionista. All right, Skechers, you do you. It's working out right now. I'm up and down about how I feel about Skechers, but this was a good quarter, and hey, you report a good quarter, you get rewarded it's a buy. That's it for today, guys. I put my portfolio up for full disclosure. I really appreciate the likes, comments, and subs. Thank you so much. Let me know if you agree or disagree with my calls, or if you have any other stocks you'd like me to cover. May the market be with you.